Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. We made it to the end of the week. What do we got going on today? Dow's down a couple hundred, Nasdaq's down a couple hundred, but what happened yesterday? That was incredible. That was kind of like a capitulation day. The market dropped on that bad inflation report, and then we just spiked higher. It was wild. Now, who was buying? That's my question. Who was buying the junk bonds? Who was buying all the debt? Want my opinion? It's the Federal Reserve. They say they're not, but I tell you, I think they had two balance sheets, the ones that they show the public and the real balance sheet. They're still buying. They're in there buying the debt. Now, a lot of people said it's the plunge protection team. Now, the plunge protection team is a very real thing. You can Google it. Possible they got that rally going. But that inflation number came in hot, and there was no real news after that. Nothing really happened, and the market was down 500 points on the inflation news, and then we closed up almost 900 points. I mean, that's like, what, a 1,400 point swing in the same day. That's incredible. But anyways, back to the SPY. It dropped below the 350, which was my target. I was buying yesterday, and I'm still long on the SPY. I think we're going to move a little bit higher from here. Now, was that the bottom? I'm not sure that it was. I think it could be, but not necessarily. But here's the thing. Okay, I look at the VIX today. All right, so the VIX is telling us that there's twice as many buyers of put options on the VIX. Now, when the VIX goes down, the stock market usually goes up. So there's twice as many put buyers than there are call buyers. Anyways, the puts are twice as expensive as the calls. This tells me that the VIX, the volatility should come in, and that pushes the market higher. Now, we are going to have volatility, though. I think we'll be higher this time next week. Now, this is a Friday. Again, we're down a couple hundred points. A lot of people going to be calling for another Black Monday. And it is like the fourth or fifth week that we've been down on a Friday. But I don't think we're going to get that Black Monday. I'm not looking for a crash. I'm looking for the bottom to form. Now, was that the bottom? It's possible. But we got earnings coming out, so expect some volatility still going into next week. But I think this time next week, we will actually be higher. That's just the way I'm playing it. Of course, you have to play it how you want to do it. But I think that the VIX is telling me that we still have some room to run in this big bounce. We bounced right off that 200-week moving average. We dropped down, we touched it, went a couple points below it. We hit down around 348, started buying right there, and we got a nice bounce. Now, it's very possible we'll come back and retest that again, and it may not hold this time. We may break right through it, but I do think we got a little bit to run in this move up. Okay, so let's get over to the real estate market. Now, what's going on there? Well, all right, so once again, we're talking about the Federal Reserve, right? So the Federal Reserve, they came out and they said they see this hot inflation number, right? So they're going to raise 75 basis points, and they may do it 2 more times this year. Raise it 2 more times, right? We're right around 3.25, and they may get it up to 4.5, 4.75, right? So they're raising the rates. That's what the Federal Reserve is going to do to fight this inflation number. Inflation came in very hot. Now, I talked about that in my last video, that my biggest fear is not a stock market crash, not a housing crash, but the crash in the dollar, the death of the dollar, really. They're destroying the dollar. Now, they'll point and say, hey, the dollar is the strongest currency, strongest fiat currency, but the dollar's going away. It's going to zero. It just keeps losing value. You go to the grocery store, you're losing value. Go buy gas. You're losing value. They're destroying the dollar. That's what their policies are doing. All right. So now the Federal Reserve, because of this hot inflation number, they're going to hike 2 more times this year. They're going to raise interest rates 2 more times. So let's say they raise another 1.5. All right. Well, what happens with the mortgage market? The mortgages right now are at 7%. If you have good credit, they're at 7%. Bad credit, up around 8%. So let's say you have good credit, you're at 7%. But with those 2 more hikes to the interest rates from the Federal Reserve, by the end of the year, we could be at 8.5 or 9%. Now, what do you think it's going to do to the real estate market? Seriously, what do you think would happen? What if we get, so 9% if your credit's good, 10% 10% of your credit's bad. Is that going to push houses higher? No, it's going to bring the houses down. Now, this is just common sense. You don't need to be an economist. You don't even need to have any more than an 8th grade education. This is pretty common sense. Rates are going to go up. People can't afford mortgages right now. Now, that's what's happening right now. The mortgage industry is in complete disarray. Mortgage demand is crashing, right? Okay, so the demand's crashing. Now, the lenders are going bankrupt. They just don't have any business. They're laying everybody off. I mean, the layoffs are just horrendous right now. In the mortgage industry, they don't have business. There's no refinancing. Why would you refinance at 8% when you got a 3%? So the refinancing's gone, right? So it's all they got is house sales. And their house sales have kind of come to a grind. Nobody's really doing much this time of year. So these mortgage lenders, they're pretty much going away. Now, you see a lot of them with desperation moves. I mean, you should see my email box. It's funny. You get, all the mortgage lenders, they want you to bring them business from your clients, and they're talking about things that they're doing now. I mean, it's just wild. I mean, there's what's called these 1-year buy downs. Okay, so the rates are at 7%, but they will buy it down to 4% for you if you get this mortgage for 1 year. For 1 year, they'll buy it down, right? But what happens after that year? Well, it goes up to 7.5%, 8% after 1 year. So basically, your mortgage, the reason they do this is so that you can qualify. Right now, even if you want the house, most people can't qualify. So this is how they're qualifying people. They're buying the mortgage interest rate down. So they only have to qualify at a 4% interest rate. But that could, for 1 year. And then they can qualify them and say, hey, you make enough money to buy this $3 million house. I mean, it's completely stupid, but it's funny how it works. So they're buying it down to 4%, but after 1 year, that's going to spike up to 8%. In other words, your mortgage is going to double. It's going to double after 1 year. And then what happens? Well, then that house will probably go into foreclosure because you can't make your payment. And now what if the recession comes and you lose your job? Well, that house will go into foreclosure much quicker. But the mortgage industry, they're getting desperate. They're grasping at straws. Now, you can see ads from Rocket Mortgage where they're advertising, we'll buy your interest rate down. I mean, and they're just trying to stay in business. I don't blame them. Everybody wants to stay in business, right? Of course they do. We all want to stay in business. But here's the problem with this mortgage industry. It's coming to a standstill. They're going bankrupt already. They're going out of business. Now, what that tells me is that we're probably going to have a financial crisis in the next 6 months to a year. In my opinion, we're already in the financial crisis. You can just look at the UK over there and the Bank of England. They are desperate. They are in a crisis. Their pensions are going broke. And I talked all about the pensions in the last video. These pensions are in a lot of trouble. They're all going to go broke. Now, here's something I just learned about our pensions, which is kind of funny. Anyways, Barron's ran this article. Anyways, you know what our pensions are investing in? Cryptocurrencies, because they have to get an 8% return on investment so they can pay the people that are involved in the pensions. You depend on your pensions. You depend on it. So you better start rooting for cryptocurrency to do well, because that's where these pension funds are investing in, trying to get any type of yield. Now, why do they have to do that? Because the Fed has kept interest rates at 0% for the last 14 years. Look at they need to get yield. They can't find it in the stock market. It's crashing. So now they're desperate. Let's go invest in the crypto market. Look at these people. They're dangerous people. They're playing with your retirement. They're playing with your future. Look at a lot of these pension funds. You're not going to get your money out. Now, you see, the government will probably come and bail them out. I agree with that. I agree they'll bail them out. But once again, that will mark the death of the dollar coming sooner, where money just becomes completely worthless. I mean, it's a very sad situation. So yes, we could have a financial crisis in the next 6 to 12 months, maybe sooner, right? Okay, so anyways, the real estate market, the house prices are still coming down. They're coming down at The fastest rate in recorded history. Okay, of course not. Your area, they're stay up. But most areas, they're coming down at the fastest rate in recorded history. And now we're going to take that mortgage rate from 7% to 9%. I'm telling you, they're going to start to drop a lot faster than they're already dropping. We're in the first inning, maybe the second inning. This will take 12 to 18 months to play out. You have to be patient. Everybody's going, but I want to buy a house now. Well, if you buy one now, you can watch it come down, okay? I mean, you can go out and buy a house now. Nobody's stopping you, but I don't think it's a good idea. Once again, just my opinion. You got to do what's best for you. But I don't think it's a good time to be buying a house right now. I think mortgage rates are going higher. People, I keep saying this time next year, they'll be at 10% or more. 10% or more. And we may hit 9% just by the end of this year because of the hot inflation print. They're going to raise the rate. They're going to raise it 1.5% on the Fed funds rate. But mortgage rates tend to go up a little more than Fed funds rate. And if the Federal Reserve ever does sell the $3 trillion they're holding in mortgages, rates could be 10, 12, 14%. Now, when I bought my first house, they were at 14%. So, okay, it's happened before. People go, it can't happen. Mike, we're at 7%. You're talking about 14%. All right, don't believe me. It's very highly unlikely that they get up that high. Okay, but they could. They could. Things are changing out there in the world. It's not looking good. There's a lot of problems. Everything's breaking. The stock market, it's breaking. The bond market's breaking. The real estate market's breaking. It's all breaking together. Something's going to give eventually. Look at, they're trying to prop it up. They're trying to prop it up by buying stuff. Look at, right now we're 31 trillion. 31 trillion in debt, headed to 32 trillion. On the Fed's balance sheet, they got $9 trillion on their balance sheet. Now, okay, can we get that 30 trillion up to 50 trillion? Will we be all right? Can the Fed raise that 9 trillion to 20 trillion? Will we be okay? Somewhere this breaks. Look, it's just stupid what we've done in the past, and we're going to continue down this same stupid path until something breaks. And I promise you, it will break. And when it breaks, houses are going to come down. Stock market's going to go down 80%. Look, I believe there's a crash coming. Not yet. Not yet. I believe the crash is still a ways away. The stock market will lose 80%. I firmly believe that. But right now, look, they're going to push it higher. They're not ready for the crash yet. See, here's the thing that people don't understand. I get a lot of comments. Mike, the economy's so bad, the stock market has to go down. Now, normally when I was a younger guy, that was true. The economy and the stock market were kind of went in the same direction. But now the economy is way down here, but the stock market's way up here. Why is the stock market way up here? Well, who's buying it? It's the Federal Reserve. They're buying it with printed money. They print the money. They give it to the hedge funds. The hedge funds buy back the stock. They give it to corporations. The corporations buy back their stock and make it go higher. So it's not tied to the economy anymore. People don't understand this. Look, I agree 100%. The economy is not looking good. The economy is in a spiral down. But it doesn't mean the stock market can't go higher. That's just my opinion. I'm Tall Mike. It's Friday, everybody. Get out there and have a great weekend. Hit the subscribe button so we can talk next week. I got some good stuff coming up. Bye-bye now.